Welcome back to the Rule Selection Private Equity Podcast. Joining us today is Nigel Green, founder of C-Suite, an advisory business working with private equity-backed businesses to drive organic growth. Let's dive in. Nigel, if you can give us a brief insight into you, please.
Yeah, Alex, thanks for having me. So my name's Nigel Green. I live in Jacksonville Beach, Florida. And I was a sales leader for equity-backed companies for about 10 years. Got lucky. Return on effort or return on luck, as Jim Collins would say in Good to Great. I had 2 back-to-back exits by the time I was 30. One sold to one of the largest privately held companies in the United States, Medline, for just shy of $1 billion cash. And I led an East Coast sales team for that business. And then the other one was a platform of addiction treatment facilities located across the country. And we sold it to Universal Health Services, which depending on the week or the quarter is number 1 or number 2 publicly traded hospital companies on the New York Stock Exchange. And we sold that business for 10 times revenue. And since then, that was in 2015, I have been running a small advisory practice where I advise CEOs and commercial leaders of equity-backed companies on organic growth.
What's one mistake that you see private equity firms or portfolio companies making, and what would you suggest to correct them?
The most problematic decision that I am seeing right now in private equity is they don't have good operators. And what was the second part of that question, Alex?
What would you suggest to correct them?
Well, it's pretty straightforward. Yes, they need to hire better operators. And let me unpack that. When I say they don't hire good operators, I'm specifically talking about commercial leaders, where the revenue generation, marketing, go-to-market, anything that is about organically improving the value of the business. They don't hire good operators. And I think that the reason they don't hire good operators is they over-index for industry experience. They over-index for a set of previous roles and responsibilities that don't match to what needs to be true right now in the context of this business, this investment thesis, this management team, and they hire the memory, not the moment.
Okay, but let's dive into that. I know you also written a book of how to hire elite salespeople. So, and obviously running an executive search firm, I feel I have a little bit of knowledge at least to talk about this. So let's go into, let's start at the start. So when a private equity firm's made an acquisition of a business, they all want organic growth. Obviously there's a buy and build strategy, but organic growth is also on the cards, on the table. What's the mistake that they're making when they're just thinking about, okay, how do we go about putting some free purchase business revenue onto the books?
They make the mistake of not communicating. So the investors don't communicate to the operators how little time they have. And so they tolerate or ignore for too long fixable interventions in their commercial strategy that, because they are ignored or tolerated for so long, bleed too deep into the hold time and suck up all the precious, expensive capital to where once it becomes untenable and intolerable, they're almost unwilling to reinvest to make up for the time and money they've lost observing and not addressing or intervening on a slow growth or correction path, depending on what the thesis is, whether it's already growing or it's a turnaround. They sit too long believing that leader, that commercial leader, has a plan that will eventually work. And that's a huge, expensive mistake.
So how do they go about making that decision of what will work, who's going to be right? There's plenty of data available. The classic, in my opinion, and what I see private equity firms do is chase black books. Guys who've been there, done that, worn the t-shirt for another business, and wanted them to bring their black book of contacts, logos across and hopefully win business, which I will tell you 99 times out of 100 doesn't work. They just chase the one out of. What's your take on what they have to do prior in order to make sure that they can, they have the information they need in order to make the right decisions?
They have to hire commercial leaders that are impatient and that are productively paranoid about not having a fast start. Okay. And so there's a lot been written on the risks and the pitfalls for coming into an organization and trying to change too much too fast and making critical structural mistakes. What ends up happening is that when they go to hire these people with black books that have been there, done that, well, you and I both know people that have been there and done that are very comfortable. They don't have anything to prove. There's no sense of urgency. And that's not the right fit. So you have to hire people that have something to prove. They're incredibly competent, but they have a chip on their shoulder or they have something to prove to someone or somebody, and that catalyzes them to a bias towards immediate action. And they move a lot faster than the person that's been there and done that. And so what I try to hire for is in the book, I talk about the 3 C's. Competency, which is the obvious one and where most searches start. They start with the competency, the roles and responsibilities, the qualifications, where did you used to work. That doesn't matter to me. It's irrelevant. What's most important is character. What do they stand for? Do they have a set of guiding principles? Do they have a vision for their life that's bigger than this job? Meaning this job must be successful for them because it makes the next step possible. Without succeeding in this role as chief sales officer in the next 3 years, they don't get to become CEO. They don't get to become a principal in a private equity group. They don't get to go start their own business. You have to find what is this person building towards? And then the chemistry. That's the second C that's really important. How much do I like this person? Do I want to spend time with them outside of work? And so when you hire for the character and chemistry with someone that has something to prove, that's productively paranoid, and you can interview for this, they figure out the competency. They'll go find the advisors or the referral partners that have the black book. You don't have to go hire those expensive, very comfortable people. You can put them in a fractional role or induce them to make introductions. You have to hire someone that wakes up every day scared that their identity is at risk if they don't produce today.
So once you have that, what about building the go-to-market strategy? So if you've got a team that fits the criteria as you just mentioned, how do you then go about making sure that the strategy fits the business, fits the market, and obviously fits the customer?
So there's really only one way to do this well, and that is to get out of fluorescent and 72, get out of those big high rises in these big metropolitan areas where all the private equity offices are, and get out and be with the customer. One of the mistakes that I see new commercial leaders, particularly in B2B, they spend their first 90 days navigating internal stuff, and they never talk to one single customer, one single prospect. And they're already behind. And so even if you come from the industry, even if you sold to that same customer base, you have to get out and validate from the voice of the customer how they experience the product. Because what happens is there's this like feature and value drift. What the founder or the management team believes is the value proposition or the problem it solves, then what the customer actually says is what it does or what it doesn't do, what the gaps are, what it does better. there is a gap that builds over time. And what most commercial leaders don't understand is that you're selling for the most part against apathy, not against a competitor. You're selling against a customer that would probably rather do nothing than buy what you're selling. Yet you're so focused on how do we win against this competitor or get market share from this incumbent, and you're not addressing that it might be easier for them to just do nothing. And the only way you solve for fighting against a customer in a market that wants to do nothing is you have to get out there and be with them and understand what's the cost to them for doing nothing, for delaying the decision, and how do we go back and shape our entire go-to-market strategy against the real enemy here is doing nothing. I just finished a study where I analyzed around 700 deals for a mid-market SaaS provider. 60% of those 700 deals that were lost have a lost reason that could be translated to did nothing. Didn't show up for the demo, added more stakeholders, pushed the decision to next quarter. And so a lot of the energy and effort on the commercial side is around, well, how do we win against this competitor? And it's all about fighting for this small percentage of the market that knows that they need the product and knows the cost of not addressing the problem with a solution like yours. Nobody on the commercial side is addressing that over half the deals in your pipeline are going to die because they found it easier or more cost effective to just keep doing what they're doing now. And that's how you fix it. You got to have a leader that's so scared about their own identity of not growing, that's willing to get in front of the market to understand that we will actually lose business to them doing nothing, not a competitor. So how do I go back and solve for this entire pipeline? In most cases, half of these deals will go to loss because we didn't convince them to do something. That's how you do it, Alex.
So on that basis of now coming back to interviewing that executive, if that's a big reason that you see, certainly for the customer base of the do nothing basis of we'll wait and see things played out, how do you assess that at interview level of how good people are overcoming that, turning it around, and fighting that good objection?
Yep, great question. So most executive interviews for anything in the C-suite, not just the commercial roles, are heavily conversational. They may make you do a personality test of some kind, but you are going to have conversations with a bunch of people. Everybody on the management team, a recruiter, you're going to have all these different multi-step committee type interviews, okay? The problem, specifically in commercial roles, every one of those leaders that is interviewing is better at interviewing than the people doing the interview. They interview for a living because they're in front of salespeople or they're in front of customers. They're really good at telling you the answer you want to hear. So the first thing that you have to do is understand that if your interview process allows for the candidate to only tell you and not show you how they do it, if there's no demonstration, if there's no exercise for them to show you the receipts of how they do what they said that they do, you don't have an interview process. You just have conversations that make you feel good. The second thing, and this is where you'll validate this, and the work that you do is important. Any good commercial leader is not looking for a job. They don't apply to jobs. They're too busy being successful at their current job. Why would they be looking for your job? So if your recruiting strategy is post a job, if you build it, they will come. If you post a job and you sift through applicants, you're going to get a bunch of applicants for sure. They either haven't done it or can't do it because the ones that are doing it aren't looking for the job. So once you understand that the leader you want to run your sales organization is already working and they're being successful, they're not looking for you, and then you go interrupt them being successful and invite them to come interview for you. If the interview is purely conversational, you're going to get it wrong. You have to make them show you how they do it.
So I'm a big believer. We've got 3 rules of hiring here that we've reviewed top private equity firms, portfolio companies utilize, and one of those is actually selling the opportunity to the candidate. Now, you've touched on it there. So you mentioned that the good executives, the good salespeople are not interested in applying for roles and out there. What do the good salespeople want? What do good sales leaders want to hear aside from I want to be fairly or well compensated?
That the management team has a good relationship with reality. That's the first thing that has to be demonstrated if you're going to sell the opportunity. Okay. Does the CEO actually have a pulse of the market? Does the CEO go and talk to customers? Or do they even know who the customers are? Is the growth plan built on hope, or was it pushed down from the equity sponsor to make the deal work? Why is this role open? Why is the person that was doing the job no longer here? Like, let's have an honest conversation about why we're in this situation. And they're looking for a management team's relationship to reality. The other thing that they're looking for is how to de-risk the decision for themselves. And this is kind of like commingled in the reality piece. But if you're not prepared to help de-risk the decision to leave a job where I already have equity, I'm already performing well, to forfeit that to at the opportunity to come work in this environment, if you don't have a comp plan that bridges the gap and de-risks that for them, you're not going to get the right people to do the job. And what that looks like is, so I just had this happen. I'm helping a client of mine find a new sales leader. And they said, well, the HR person said, this is the salary and this is the comp plan. And I just kind of chuckled, and you'll appreciate this, Alex. I'm like, you don't know what the salary is yet. You don't know what the comp plan is because you haven't found the candidate that can do the job. We'll find the candidate that can do the job, and then we'll know what it costs. And then we'll adjust the budget based on what it costs to get someone in here that can do the job. You were paying the previous person this, and it didn't work out. So we don't know if it's because it wasn't the right person, or you weren't even in the right category of the right people. So when you flip that whole model upside down and you go after people that don't need the job, you got to be willing to meet them where they are and design a comp plan to de-risk it for them.
A quick break from the podcast to introduce Chief Outsiders. Chief Outsiders help private equity firms and their portfolio companies accelerate revenue and increase enterprise value fast. Their bench of seasoned growth executives aren't career consultants. They're strategic operators who've led sales and marketing inside real businesses. They embed directly into portfolio companies to drive growth from insight to strategy to execution. And when deeper capability is needed, their on-demand execution teams jump in to get companies to go to market without the delay or long-term cost of full-time hires. Everything they do is backed by a proven, market-tested methodology and an AI-native operating system built from more than 2,000 engagements, bringing collective experience to every initiative. Chief Outsiders have partnered with hundreds of private equity firms and even more than 500 portfolio companies to drive billions in revenue growth. If you're looking to accelerate value creation across your portfolio, visit chiefoutsiders.com. The Chief Outsiders growth starts here. When you say design that comp plan to de-risk it for them, if you're thinking it from the perspective of, okay, well, why private equity, but like, why do we need to de-risk it for them? If they're good enough, they'll come in, they'll hit the numbers, they'll achieve what they need to achieve. We'll put a commission, we'll put a bonus on their EBITDA. What do you say to that?
Well, what I say to that is, what you're fighting against is your own bias with reality. If you can't defend, if you can't show with evidence that the person that's no longer here was able to demonstrate all the things in this model, the at-risk compensation, how do I know if I'm the candidate that, despite my best efforts, you're not the problem? The organization isn't going to be the reason why I can't go and hit this number. And that's where that whole line of thinking around, this sitting in a sterile environment, modeling out stuff on a spreadsheet, falls flat when you are hiring people that are out doing the job and doing it well. They're able to poke holes and say, well, if it's so easy, why do you need me? Like, well, you should have already solved it. If it's that straightforward and it's that believable, we don't even need to have this conversation. That's the thing. That's the dose of reality piece that I think a lot of hiring teams in private equity don't understand. They don't have a really good relationship with the fact that it hasn't been going well, and it hasn't been going well. I mean, that's a pretty widely accepted reality in private equity. Hold times are longer than they've ever been. There's more divesting and carving out assets and selling them off as a sliver of the package deal. There's continuation funds. The candidates understand that too, that they don't know how to grow organically. And sometimes growing organically has less to do with the leader and more to do with the business is unwilling to build the business for what the market wants.
So when you're working with your executives, with the sales teams, with the sales leaders who are building the engine, if you refer to as that, to grow that business, obviously there's going to be some challenging as thinking to what they're doing at the moment, but how much of a pivot is it for a lot of these businesses when they're looking at putting the engine in that works, that drives the growth? How much are they getting things wrong? I know that's a bit generic, but I think it's just a kind of indication of the people who are listening. They're going, yeah, well, the problem is that private equity doesn't know what good looks like in order to drive a growth engine in every business. And therefore they're trying to measure the executive coming in to say, yeah, I can grow your sale. Yeah, no worries, but you'll have to pay me a lot of money because of this, and this, which is fine, right? Problem is they don't know what to measure on the way in. So how much fundamental changes are being made with the businesses that you're working with from their model and the way that they go to market? Is it complete revamp, tweaks? What's the majority of time spent in which camp? Small tweaks, big complete reshuffle?
I understand the question. I would say the majority of my clients are in the camp of small tweaks, asymmetrical return. Okay. And I'll give you some examples of what that looks like in reality. Oftentimes, I get pulled in to assess a sales team, and the problem as they experience it is that we're not growing fast enough. We need more leads. We need more logos. Our pipeline is empty. We need more in the top of the funnel. And what I end up finding out a lot of times, Alex, is that they actually don't need more new logos. The problem is that they haven't found a way to make the offering good enough that customers want to stay, and they want you, the offering, the service or product provider, to become deeper entrenched into their business and help them solve additional problems. So typically we need more growth, we need more pipeline. What that signals to me is we probably have a churn problem. We're losing customers. And so we think the only way to fix it is go get more of them. Peter Drucker said the whole purpose of any business is to create a customer. Everything else is just an expense. And what I take that one step further and I say, and it's so much easier to go back to a customer you already have and get them to buy something else or pay more than it is to go get new. And so that's an example of where I come in and say, guys, you don't need to overhaul everything. But I was just on a call earlier with the CEO. They got 220 customers. And I asked the CEO and the sales leader, I said, okay, show me in the past 6 months how many of those 220 customers had a proactive conversation with someone on product or customer success about how the tool works, how they're using it to solve problems. And I don't want to hear about, no, this were the tickets where they had an issue that got, how many of those 220 customers did you proactively engage to try to figure out how we can do more for your business? The answer was zero.
Wow. Okay. My take on from running processes for executives. I spent a great deal of my early career running searches for salespeople, sales engineers, technical salespeople into the manufacturing engineered products industry. And my take on most salespeople, and indeed most sales organizations, most sales units within companies, are predominantly built around account managers, farmers, order takers, whatever you want to call them. What does a good sales leader do to change that to being proactive rather than reactive?
Changing what to being proactive than rather reactive.
So, for example, right, let's take, for example, a private equity business just acquired a first-time investment business, a first-time privately backed company, found our own prior, lots of relationships, built that, predominantly built through referrals, and they wanted, and the private equity firm's like, right, there's an opportunity here. Every sales investment sim says, with a practice strategy, this business could be double, triple, 3 times, 4 times, 5 times, right? Classic, right? And in perpetuity, that's great, but rarely happens. What does a good sales leader do to take that business from being sleepy and reactive to proactive outbound sales organization that wins new business outside of relationships and referrals and we've always done work with this customer?
Yeah. Okay. I get the question now. The first thing that they have to do is address friction. Okay. In every organization, there's a friction in the buying process. The friction is easy to ignore or to be blinded. Sometimes the relationship, the proximity of those early customers that knew the founder or came from the network, whatever, like those early adopters, the relationship overcomes a lot of the friction in the transaction mechanism or in the buying process. A good sales leader that wants to get away from just that reactive and then the referral and wants to go get those unaffiliated buyers that bought because of something other than a relationship or the expertise of the founder, they got to go remove all the friction in the buying process. And when you remove friction, that's when you start creating value. Friction might be as simple as why do we need to do a demo? Why does the customer have to schedule a demo with a sales rep? Why can't we just record a demo video that they can watch whenever they want, have a really good FAQ wiki that addresses any question that they might have about pricing, integration, how the solution works, references. Why do we need a demo when we can just put a buy now button on the website? Unhide it, put a buy now button, take their money. That's an example of what a good sales leader does, is to say, why do we need a demo? Let me go watch the demos. Is there something about the sales rep, their expertise on the offering, the ability to pivot on their foot with a technical buyer that can't be replicated in the video? I don't know. Let's go watch a bunch and figure it out. And then you get to the place where you find you don't need to do 30-minute demos. You don't need to be measuring number of demos completed or demos scheduled. You need to just put up a 7-minute video and a buy now button.
Taking the friction out of the process, like it.
Get rid of the friction.
So away from sales, obviously your role is as advising and supporting private equity firms and their portfolio companies on that go-to-market sales strategy, etc. Commonly terms would be an operating partner if you actually work for the private equity firm. What do you think it means to be a good operating partner and to be good at the work that you do?
Yeah. Um, the private equity world doesn't really know what to do with operating partners. And if you were to ask, before we hit record, I said something along the lines of, if you were to ask 10 different managing partners, 10 different private equity funds to define an operating partner, you get 10 different answers. And I would say you could probably ask a few or a handful of principals within the same fund what an operating partner does, and none of them would give you the right answer.
Yep.
Okay, so it's a catch-all title. I've been an operating partner with Shore Capital since 2018, and I'm an operating executive with Union Capital, and I've worked independently as a consultant for probably 12 other mid-market to upper middle market private equity funds. What I know to be true about really good operating partners, they're still operating, first and foremost. They have to still be operating some business, even if it's just their own. They have to be operating. They can't be, I don't think you can be a good advisor and be retired, but retired, already had the exit, just cashing a board check, that's not a good, successful model for an operating partner. The reason why they have to still be operating, Alex, is that the real value is not telling that operator what to do. It's sharing the cognitive load, the weight of what it means to be an operator on a leadership team for an equity-backed asset where the board is just, they want more information. They want it now. The stuff they're asking for means absolutely nothing to doing the job, but still they want this information. They've got thoughts and feedback. They want to do all these calls. They want all this bullshit from you, and it means nothing to how you run the business. Yet you've got this day-to-day thing that you have to do, and you can't go and ask for too much help to the C-suite or to the equity sponsor, because then you're worried about, do they think I don't have it? And so a good operating partner is able to share the cognitive load with an operator and not necessarily tell them what to do, but help them think through the consequences. Because what I think is the real problem with operators is that they don't do anything. They don't make any hard decisions. They let the theater, they let the politics, they let all of the distractions and the other voices and the noise cloud their ability to make tough decisions that will never reach consensus. And sometimes the data and the information will not help you do it. But you have to make these decisions. Decisions like kill a product line, fire a marketing leader, dissolve a channel partnership, kill a demo motion, and put a buy now. Those are really hard decisions. And what I've found is that most operators know what they need to do, but they choose to do nothing because they don't have an operating partner outside of the organization that gives them permission to go and do what they think they need to do. And that's what a good operating partner does. It wrestles with the hard decisions, the consequences of each potential choice, and helps the operator decide with clarity and conviction on what to do.
Okay, makes sense. What is something you read, watch, listen to that you recommend that others on the listening to the podcast should check out?
Read, watch, or listen to. I will tell you that I used to read a lot, and I used to listen to a lot of podcasts. I would say less. I think we're at a time where I don't think you need to read or listen to as much. I think you need to get quiet. And I think you need to limit the information you are consuming and focus. So my answer may not be popular, but I think the answer is read less, listen to less, consume less, and do the damn work.
Execute more. There's something I'm
Yeah.
and I've got a big stack of books behind me, and I would usually buy anywhere between 3 to 5 books a month, and for the last 3 months I've bought nothing. I'm literally reading very little, and I'm on execution mode of what I have and the availability, and if I've got a problem, I'll dive into that and then move on to it. So I think there's a lot to be said in that. If anybody wishes to reach out to you post this podcast, Nigel, how best to get in touch, please?
I'm easy to find. You can find me on LinkedIn. My website is nigelgreen.co.
Marvelous. And well, thank you very much for coming onto the podcast, giving us insights into organic growth and recommendations on how operating partners should structure and run their business. So thank you very much for coming on the podcast.
Thanks, Alex. I enjoyed it.
And as always, thank you very much for everybody for tuning in to the Private Equity Podcast. Till the next time, keep smashing it.